Bitcoin just tapped the exact same demand zone where previous bounces started. Analyzing the 4-hour MACD shortly, the same signals are firing yet again. Now, in the past, these signals have marked reversals, and this time around, they are glowing like a Christmas tree. So before we actually start to panic and writing up an obituary for the bull run, let's look at this chart. So this is the 4-hour Bitcoin MACD signal. At this moment in time, we've seen a bounce in the 87K territory, sitting in the demand zone, which has been protecting the trend for the last month. We do have the 100 EMA above our heads at 90K that needs to be reclaimed here as resistance. But there is one very important signal that's actually printed. Now, if I mark a vertical line here in correspondence to price action and to the MACD indicator, we have just formed a bullish cross under the histogram. Now, if we analyze previous signals and go back a couple of occasions where similar bullish crosses printed, you'll notice that this is where in the green demand zone over the last month, when the bullish cross occurred, we actually saw the relief rally for Bitcoin into its imminent supply block, which roughly sits at 95K. Now, there was also one signal that printed before this one, which was in early December and led to a pretty similar move. So the histogram was very overextended to the downside. On the 2nd of December, we got a golden cross. And in correspondence to price action, this is where we saw a massive markup into the imminent supply at 95K. So let's break this all down, because the charts are saying one thing, but the macro has just flipped a bombshell which could drive the markets into overdrive, which now leads us onto our first piece of macro news. Breaking: the market cap for tokenized assets surpasses $330 billion, marking an all-time high for the category. Tokenized assets include stablecoins, tokenized funds, tokenized commodities, and tokenized stocks. Collectively, they have placed a new all-time high of $330 billion, and it doesn't look like there's any slowing down anytime soon. This is not a trend, this is migration. Everything, literally everything, is coming on chain. Bringing us over to our second piece of macro news, it doesn't matter if BTC goes up or down $9,000, over $6 billion in leveraged trades will be liquidated. So really and truly, up or down doesn't matter. The spring is compressed, the wick is lit, and this is why price looks like it's doing nothing, because volatility is building pressure underneath, which leads us on to our third piece of macro news. Just in, NASDAQ just announced that Bitcoin treasury company MicroStrategy, MSTR, will remain in their NASDAQ 100 index. Now, what this means is institutional validation at scale. Bitcoin is no longer just the weird internet money. It's in fact being embedded into traditional benchmarks. Wall Street is adapting, not resisting, bringing us onto our final piece of macro news. As institutional flows increase, Bitcoin-backed apps are evolving to meet new expectations of stability and trust. LukeX explains how recent events highlight Bitcoin's unique strength and why institutions are growing more comfortable deploying it on-chain. So Bitcoin-backed apps are building fast, with audibility, transparency, and trust being the institutional requirements. So the message is pretty simple. Institutions aren't just comfortable with Bitcoin, they are increasingly depending on it. So now that your macro dopamine levels are rising and we have driven the macro into your skull, let's head over to our first Bitcoin weekly signal on the higher time frame. Now, there's a very important EMA here that I want us to focus on, which is the 100-week EMA. And it's this black line that's rising here where Bitcoin is currently sitting above. Now, it sits roughly in the 85.8K territory, and there are two possible scenarios that we need to keep our eyes on. Now, the bullish case is we see a macro push up into this supply block above, which sits between 100 to 105K, witness some sort of consolidation or higher low support in this territory, and then look to push towards new all-time highs in the coming weeks. failing that, the second side of the coin is where we actually start closing below the 100-week EMA and witness a retest back into this demand zone. Now, we do have previous lows in this territory from early April, which sit roughly at 75, 76K. And also, we have these previous highs that were once resistance from sort of, where was we? We was looking at sort of March into November before we initially got the break. So this previous highs, or these previous highs, should I say, from early 2025 could be a key area of support if Bitcoin decides to sort of roll over, lose the 100-week EMA, and then retest into this deep liquidity pocket. So at this moment in time, both of these scenarios are just normal market behavior. There is no signal to say it's the end of the cycle. It's just simply the market breathing, which now leads us on to our next chart. We're looking at the lower time frame ascending triangle, and we've been covering this for the last couple of days. What we have here is an imminent supply block between 94 to 95K, and we also have demand in the sort of low 89 to 88K territory, which is where currently the price is actually sitting. We have this rising level of resistance and also a higher level of ascending support, where over time Bitcoin has been forming these higher lows on this trend line, which has signified relief rallies ever since the formation started back in late November 2025. So until we actually see a decision here of this trading range where we have the potential to break through the supply block or resort back to losing the ascending trend line that we've been holding since late November, everything is just noise. Bitcoin is coiling, not collapsing, which brings us over to our next chart. We are going to be studying the EMA ribbons here, again with two potential scenarios. Now, over the last sort of few days, we have seen rejection inside this sort of cluster of EMA ribbons, and it's brought us back down to our $87,700 support, which is the lows from early December. At this moment in time, we are seeing some nice relief, but do have the EMA ribbon clusters above to break through. So if we get the bullish scenario and actually start pushing through these EMA clusters, then this would be a fantastic sign for continuation higher. However, at this moment in time, we do have them above as resistance, and the second scenario is actually losing $87,700, confirming it as support, and then pushing back down to the wick lows from November 2025 at $80,000. Now, this is the battlefield between trend traders and is the line between annoyance and opportunity, which brings us onto our final chart of the day, where we are looking at our liquidity hunt map on the 2-hour time frame. We've had 2 or 3 very successful trades in the last couple of days where we had major liquidity sweeps into the supply block, which on the second occasion allowed us to mark a perfect entry to go short into our take profit area. Now, once we actually tapped back down and got the deep liquidity pocket filled in the territory from the lows of sort of early December at 89K, we then got the perfect retest opportunity to run back into the supply block once more. We have now resorted back down to the TP area and have lost the support zone and are now running into it as resistance. So Bitcoin has to make its mind up here on the 2-hour time frame. We are at the moment at a crossroads in this sort of territory where we are waiting for a decision. We either push through this level of resistance at 89K and run back into the supply block once more, or we start resorting and turning this into resistance, hit our head on it, and then start pushing back down to those sort of low early sort of late November lows in the low 80K territory. We do have the liquidity pocket below, but it's not hard to ignore the fact that we have this wick low that could also act as a major level of support if we start pushing through that liquidity demand zone. So this isn't about predicting direction. It's actually about understanding the differences in liquidity between the extremes, which now leads us over to our chart of the day, coming back to the Bitcoin MACD signal, which in the past has marked the reversal and bounces for Bitcoin. So as of recent, in the last sort of 24 hours, Bitcoin is at a local low at 87K and is seeing a relief rally. At this moment in time, we do have the 100 EMA sitting at 90K, on our heads that we need to break through. However, the MACD is about to print once again a bullish cross, and the histogram is in the oversold territory. Now, if we actually analyze previous sort of MACD crosses in similar regions and areas from the past, we have a very telling signal here. So just looking at these local lows and where the MACD was actually at, this is where in the past, as speaking throughout December, when price is at these lows in the sort of mid to high 80k territory, and we have a golden cross on the MACD, we've seen these strong relief rallies. Okay, and this time around, I don't expect it to be any different. The potential is on the cards, and this is where the bulls could step in. So this vertical line, again, the golden cross on the MACD, the same signal that's about to print here, is where we have seen upticks in the past. So looking at this chart right now, the 15th of December, we are about to print the same signal from early December, which is marked local lows on the lower time frame, and specifically the 4-hour MACD. Will this time be any different? And are we likely to see a markup from the demand zone? It's a very strong potential. Just keep in mind, we have the 4-hour 100 EMA above at 90k to reclaim, and staying above this level or reclaiming it would actually be more in favor of the bulls pushing up into this bullish cross signal. Now, does it mean a guaranteed upside? No, it does not. But ignoring these signals has been detrimental for traders in the past. So Bitcoin is not dead. It's just simply loading. Now, here's the full picture. We have a new all-time high of $330 billion for tokenized assets. We have a potential move where Bitcoin either goes up or down $9,000 and will liquidate over $6 billion in leverage trades. We have NASDAQ just announcing that Bitcoin Treasury Company strategy will remain in their NASDAQ 100 index. Institutional bullishness. We also have a institutional flow increase where Bitcoin-backed apps are evolving to meet new expectations of stability and trust. The higher time frame weekly signal is signaling that we have the 100-week EMA support at 85k, which could leave in favor for the bulls, but failing to hold it as support, we have liquidity pockets below that we could tap. We also have on the 4-hour time frame a very compressed trading range between a level of resistance and higher low support, waiting for a decision. We also have the EMA ribbons with clusters of EMAs above. Simply put, 87.7k is the current level to support, and we need to see a push through these ribbons for the bullish scenario. Failing that, we have support below from the previous wicks in early December and late November. Now, the 2-hour liquidity hunt map has been a perfect sort of setup for traders, and at this moment in time, we are waiting for a definitive outcome where we have previously turned this level of support at 89k into resistance. Breakthrough, we have the supply block at 95k to retest. Fail, we come back down into the liquidity pockets for another potential liquidity sweep. Now, lastly, the MACD signal, the chart everybody is eyeing. We have printed another golden cross, which in the past has marked an uptick for price action. Will we see the same again? Until next time, keep your hats on. Goodbye.